Amazon lending Amazon basically has two primary products in the US. It's Amazon lending and then their line of credit with Marcus by Goldman Sachs line of credit. So let's first talk about Amazon lending. Those are typically going to be term loans, which means they'll give you the money. You make equal payments every single month to pay it back, and you pay an interest rate. So Amazon lending and Amazon loan could be a good option for a mature Amazon business that's kind of not growing as quickly anymore and needs some financing. The thing that you really want to be careful with or consider with Amazon lending is going to be the length of the loan. So Amazon lending loans can range from 3 months to 24 months. And for example, if you borrow $100,000 from Amazon and they give you 3 months to pay it back, you're basically making a $33,000 payment every month. Whereas if they give you that same $100,000 and give you 24 months to pay it back, you're only paying about $5,000 a month. So the important thing to consider with Amazon lending is really the length or the time frame that you have to repay the loan. The shorter it is, the more of an impact it's going to have on your cash flow, and it could potentially have a very negative impact on your cash flow. So that's going to be really important with Amazon lending. But if you get a long term and you're making $5,000 a month in monthly payments for a $100,000 loan, it could be a pretty good deal for you, especially if you're not trying to reinvest your capital and grow as quickly. The Amazon line of credit from Marcus or Goldman Sachs, it's essentially a credit card that's also secured by your business. So in terms of the actual terms and cost of the loan, or the credit line, it's really not that bad. It's basically just a credit card. I think the thing to be careful with the credit line from Amazon is that it's a credit card that's secured by you personally and your business, whereas if you just go to any bank, you can get a credit card that's either secured by you or your business. So in this case, you're basically guaranteeing the credit line with your business and yourself personally, whereas you can go to a bank and either get a personal credit card or a business credit card and not have to basically double guarantee it. So I think that's the thing with the Amazon credit line to be careful with. And then really with both Amazon funding options, I think a big thing that you want to consider is, do you want to rely more on Amazon for your infrastructure and for your business needs? So I think like Blair was saying, diversification. We've had worked with people before where they have their seller account suspended and they have a loan from Amazon, and Amazon's still telling them they need to make payments, and you're trying to explain to seller support or Amazon lending, I can't make payments because my account's suspended. And it's kind of like trying to explain to a 5-year-old that they can't eat candy for breakfast. It's like they don't really understand how the two things are related, and it's just another kind of way where you're relying on Amazon and then relying on Amazon's seller support to basically be able to help you if you need help, and you're kind of putting all your eggs in one basket. The last thing that I think you mentioned were merchant advances, factoring, revenue-based loans, all of that kind of stuff. And Amazon doesn't actually offer any of those products directly. They're offered by third-party financing sources. And the thing to really keep in mind with all of those is the terms are all going to be very different, and they all have different purposes or different pros and cons. So when you're looking at any type of financing for your e-commerce business, you want to understand it's not like just going to get a mortgage where you're going to be comparing a 15-year or a 30-year term, and your interest rate's going to be somewhere between 4% and 6%, and that's really all you're looking at. There's a lot of nuance to all the different financing options out there for Amazon sellers and e-commerce businesses. And before you sign on one and you take the money, you want to make sure you understand all the nuances and how that's going to impact your business. So really though, at the end of the day, the number one rule is make sure that you don't borrow money if you're doing it to cover losses. You want to borrow money to grow profitably. So a lot of Amazon sellers out there, they're looking at all these financing options saying, well, my Amazon business lost $10,000 this month, so I need to borrow $100,000 so I can cover my $10,000 losses for the next 10 months. And if you do that, you're basically just digging yourself into a hole. It's better to say I made $10,000 this month, and if I had another $100,000, I can make $20,000 next month, so I'm going to borrow money. So you want to borrow money to grow profitably. You don't want to be borrowing money to basically cover losses.
Hey, it's Riya Mittal here. Before you leave, make sure to subscribe to SellerApp's main YouTube channel where we upload all things Amazon and some how-to guides that will make sure that you're winning on Amazon. You will not get this anywhere else. Until the next time, happy selling.